operators are launching Challenge Arena. So in the coming quarters, we should see a good growth on that front at plan also. So let me pass it to Krish for more detail. Krish?
Great. Thank you, HC. Good afternoon, everyone. Warm welcome to you all. Thanks for making time. I'd like to share progress in Q1FY22. As usual, I'll start by touching upon high-level performance and specific product highlights and our key priorities going forward, especially on the gaming side. So the key highlights, core business revenue in Q1 was more or less stable at about 135 crores, roughly a small 1.4% decline. EBITDA was double digits at about 11.3% margin. And our PAT grew year on year 35.8% and about nearly 10% Q on Q. So I just want to get straight into our products because that's where most of the key insights are. So on our core existing products, we continue to digitally transform many of them, including the operating model. And especially on the videos and editorial side, revenue was stable quarter on quarter at about 659 million INR. We mentioned last quarter that we had an operator that had taken specific measures at capping customer acquisition, and that had impacted revenue in Q4. And we were discussing with the operator to remedy the situation, and happy to state that that's happened, and that's why we are seeing revenue stabilization over there. On the tone side, there was a slight decline in overall revenue, about 2%, but as we continue to digitally transform that business, digital tones showed robust growth of about 12.5% quarter on quarter and nearly 17% year on year. And much of that revenue growth is primarily driven by more digital app installs. So digital app installs grew about 54% year on year to about 21.4 million installs, and that's roughly an 8% quarter on quarter growth. So what's happening in that business is we're just seeing migration of users and revenue to digital, even in our core legacy business, and this transition is in process and looking good. Coming to our games unit, as FC said, lots of progress. I think this is our future growth business. We saw very good traction with customer signups and progress in just the first quarter of our launch with Challengers Arena. So I'll start with Challengers Arena first. Excited that this within the mobile quiz gaming genre, we've seen more traction than we had actually originally planned. And telcos feel that Challengers Arena is a cutting-edge product with very good gamified experience. So if you look at the past quarter that went by, Q1, we've had about 6 customer signups and 2 live customers with total gross subscribers of about 490,000. And Q2 estimates roughly 12 customer signups, 7 live, 3 more deployments are in progress, and we hope to have more than 1 million cumulative gross subscriber additions. And by Q4, our estimate is, as many of you would have seen in our earnings presentation, we are on track for 25 customer signups and likely 20 live customers. So as I mentioned, this is fantastic trajectory, for the next 2 quarters. It's more traction than we originally planned and thought. And that's primarily because of a lot of things that we've done on the product side. While we talk about revenues, it's also important that the product is a good product that customers and telcos value. And we enhanced the product over the last quarter, and telcos and their customers have been very happy. Right now we have about 17,000 questions on the Challengers Arena platform. I think we started last quarter with about 12,000. So we've added roughly 5,000 more questions. And we think we'll continue, adding at that same pace and likely end up with about 40,000, questions in our question bank. What's even more important is we also added local language capabilities. So last quarter we had just English, And now, we've moved into most of the, prominent Indian languages. We've added Hindi, Tamil, Telugu, Kannada, etc. And we'll be adding, more Indian languages over the course of the next quarter or two. And we're also adding other European languages for our, European customers. Also, from an end user player standpoint, returning payers of Challengers Arena are playing roughly 75 to 80, quiz questions a month. And that's a lot for, just the first quarter of launch. It's a very, very healthy sign of player engagement with the product in the first quarter itself. And I think all this is contributing, to telcos adopting this product easily as they see their subscribers engaging with the product. So I think what is key is, customers and payers need to engage with the product. It's not just about sales. And we very keenly track, some of those metrics to see if customers are engaging with the product. So 75 to 80 questions a month is not a small number. And, we hope to keep increasing that, but that's just for start. On, the Onmobile B2C cloud gaming platform, again, huge progress on multiple fronts in the last few months. I think when we last talked, we had just about released, the beta version of the product on May 20th. And that was, over the last 2 months, we've had several conversations with telcos once that product was ready. And in just over 60 days, we are already in, 15 advanced conversations with telcos, and 3 of them have already reached sign-up stage. So we are on track, as we said last time, for the Q3 launch with the telcos. And we said this last quarter, 2-3 months back, when we had just started those conversations. But today we are even closer, and we have greater visibility and confidence based on these conversations for a Q3 launch with quite a few telcos. I think that said, what's important is, what the telcos feel after having seen the product and having had these conversations, and that's been phenomenal. As FC has said, it's a very differentiated product, and that's resonating really, really well and strongly with the telcos because they feel that our cutting-edge vision, artificial intelligence technology, short gaming moments that we have on our platform, combined with cloud streaming, makes it a cloud gaming platform that is unparalleled and something that they've never seen before. And see, all these telcos are obviously, across Europe and across Asia, and they've been talking to a lot of different gaming platforms. For them to engage with us and give that validation is, very, very strong indication that this is a truly differentiated, cutting-edge global product. I think we'll see, very similar traction and customer adoption on Onmo like we are seeing with Challengers Arena. The only difference is, it's starting 2 quarters later. And I think by Q4, we'll expect to have about, 12 telco signups and maybe 8 to 10 of them live. And the trajectory over the next 3-4 quarters for Onmo is likely to be the same or even better than Challengers Arena. So I don't want to I don't want to look 4 quarters down the road, but we are very confident that we'll have about 20 customers, over the next 4 quarters. And what is it that's giving, telcos this confidence? Of course, we mentioned about, cutting-edge vision AI technology, our short gaming moments, and cloud streaming. All these are very key differentiators. But over the last quarter, we also added a lot of content on the platform. When we launched this in May, we had about 29 games and 850 unique challenges on the platform. And in just the last 2.5 months, now we've got about 55 games and over 2,500 unique AI-driven challenges on the platform. That means in about 60 to 70 days, we've nearly got 2x the number of games and 3x the number of challenges. And this is the pace at which we think we are going to move over the next 3 quarters. Which means that, by Q4, we will definitely have more than 150 games and, 10,000 challenges. And that will make it by far one of the largest set of unique challenges that you can find globally in the gaming space. And, these 10,000 unique challenges will also make Onmo the, first challenges creation engine powered by artificial intelligence. This is Vision AI technology, which pretty much reads all the scores and creates short, interesting game moments out of larger games. And we launched the virtual currency product in May 21, and as FC said, the team is really focused on getting the cash battles and monetization out. That is also on track, as we said. We said last quarter, and we continue to go as per our estimates that we will have this out by September. This will be tested for a few weeks with multiple payment mechanisms, and we should see monetization of that starting early October. So once again, it's more B2C, but on B2B, as I said, we are definitely on with the telco launches in Q3. I think to a large extent, we've seen some good, interesting usage of the product. Average, session duration of players. On an average, any incoming player is playing the product for about 25, 30 minutes a day, which is really, really good for a product that is still just about 2 to 3 months into the market. And once we add all these compelling cash battles and the change in UI, which FC mentioned, the engagement is just going to go even more further beyond the 25 to 30 minutes. So, if we can get to about 45 minutes, I think that will be really good, in the next quarter or two. So we are really optimistic, right? So with all these things that we are doing with Onmo, that it's going to be the dominant social esports cloud gaming platform. And if you look, both our gaming products are, global in nature, and the mobile gaming space is expected to grow from roughly 78 to 80 billion in 2020 to about 110 billion. And that's the market that we are playing in. It's a huge market, and we are investing in a space that is, growing double digits and rapidly. We have a world-class, gaming products team backed by excellent product and engineering talent across India, Sweden, and Canada working on this. We'll continue investing in these teams and hiring people from the best internet and gaming companies globally. So, that kind of summarizes everything about our gaming products, which, we are on track to deliver as, we've been saying with the dates. On the organization side, we continue to emphasize employee safety. They're still predominantly working from home. It's been a challenging few months for us just getting gaming products out into the market. Although I think about 3 quarters back, we thought we're going to launch just one product, but today we've launched 2 products, pretty much globally, and that too, with teams that are working remotely. And frankly, we're just excited about the opportunities that lay ahead of us, because the first leg of getting the products out is done. I'm very encouraged by the technology building and the product focus and the quality of talent that we have and the acceleration and momentum we've seen in this quarter. A few quarters back, we said, we're just going to launch Onmo. This was a first for Onmobile. It was an audacious goal, but we've done it. And now we've launched not just one, but 2 gaming products out there. So we are off to a great start, in this year. We started it with a clear strategy. Now we are incredibly focused on our execution, product innovation, and our customer and telco growth over the next few quarters. So, with that, I'll hand it over to Sanjay Baweja, our CFO, for his comments on, the financial performance for Q1. Sanjay, over to you.
Yeah, thank you, Krish, and good evening and a very warm welcome to all of you on the call. Hope all of you and your families are safe and healthy. Let me quickly run through some more details on the financials. I'm sure most of you would have already seen the investor deck that has been mailed to you and also hosted on our website and exchanges as well. If any one of you is not on our mailing list, please feel free to mail us or connect with our investor relations team, and we will add you to our distribution list. However, before I start with financials, I'd like to really, talk about the comments made by Krish, and I'm really happy and excited to see that we've considerable traction for Challenges Arena and have started generating revenue from this quarter. We will continue to remain focused, of course, in our endeavor to create considerable revenue opportunity for our overall gaming business, Challenges Arena and the Onmobile part. Our Q1 FY22 revenue was stable on a quarter-on-quarter basis at about 135 crores. As mentioned in our earlier calls as well, the reduction as compared to last year, same quarter, came from Europe and bit from the MEA region. Europe and MEA revenue declined mainly due to some operator policies. We've now sorted those issues, and things are already showing an uptick, and we are expecting things will improve further from a revenue front as we go along in this quarter and the next one to follow. In line with our strategy to shut down any business entity that does not measure up to our stated goals of revenue and profitability, we are continuing to focus on unprofitable Latin American businesses and are in the process of exiting from those countries. As mentioned earlier in the calls also, I would like to reiterate that we have completed this process substantially last fiscal year, and the full closure of entities is expected in the current fiscal of 2022. On the cost front, our manpower costs declined 11.8% on quarter-on-quarter and about 11.6% year-on-year, primarily due to our cost rationalization efforts. Our long-term stated target for manpower cost is 20% of revenue. We are currently at about 23%. This is both a function of cost decrease and revenue increase. I must reiterate, we continue to acquire employees for our gaming business while we right-size the legacy business requirements. We expect to achieve this target within the next 12 months of our cost as a percentage, manpower cost as a percentage of revenue. Our marketing costs increased by about 30% quarter-on-quarter and 52% year-on-year, mainly due to one-time activities involving one of the large customers in Europe. Other OPEX declined by about 22% year-on-year. However, the increase of 10.4% quarter-on-quarter is due to a subdued quarter last year, which had certain one-time reversals in the previous quarter. The EBITDA for the quarter stood at 14.5 crores and with a double-digit margin of 11.3%, mainly due to the above-mentioned manpower cost saving. Our endeavor is to maintain and improve the current margin levels with continuous focus on cost optimization. Operating profit, of course, stood at 11.9 crores with a margin of 9.2% during the quarter. Our profits after tax at 16.4 crores, reflecting a growth of 9.8% quarter-on-quarter and 36% approximately on year-on-year basis with a 12.7% margin. This also included a one-time exceptional gain of about 7 crores. Our DSO, again, we improved to 122 days in Q1 FY22 from 137 days in Q1 FY21. The cash on books stood at about 227 crores for the quarter as compared to 266 crores at the end of Q4 21. This decrease is mainly due to our investment in Chingari of 31.8 crores and other R&D costs of INR 7.1 crores. The R&D is mainly on the Onmobile products. As mentioned by Krish, we will continue to invest in our gaming products, and we are progressing well, and we'll start yielding revenue within this fiscal. A lot of operating metrics and data have already been shared in the presentation deck. I'm sure all of you would have had access to the same. With this now, I will hand over the call to the operators to open the floor for Q&A. Thank you very much.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If your questions have been answered and you wish to withdraw yourself from the queue, you may enter star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, you may enter star and 1. We have the first question from the line of Jay Prakash Maheshwari, an equity advisor and investor. Please go ahead.
Congratulations, team Onmobile, for another good quarter. I wanted to know about the customer base of Challenges Arena. It is 490,000 right now, and what part of it is paid and what part of it is premium?
Krish, you want to take this?
Yes. So on Challenges Arena, that is, gross subscriber additions of 490,000, and the net paying subscribers at the end of the quarter was all of them are the paying base, but the net paying subs at the end of the quarter was about 140,000.
Okay. So you mentioned about the average time per user spent on the app. So is it based on the average per user in a 1 month scale, or like when a customer enters the app, then it is 20 to 30 minutes?
Oh, that number I gave you was for Onmo, not for Challenges Arena. But These numbers are on a daily basis. It's not monthly. The number of questions that they answered, which is what I gave, was on a monthly basis. So that's roughly between 75 to 85 gameplays that they have in the first month.
Great. And as cash battles are going to launch in September, so I wanted to know about the economics behind it. Like, suppose I'm battling with a friend of mine. So if I win, will I get the complete sum, or there will be a part of commission in Onmo, and what part will be in tax? So what is the margin per user, if you can explain?
Yeah. So I think as we described the business model or the revenue model for Onmo, so it's essentially, let's say you're playing against, there's a player A and a player B, and each puts in, let's say, 50-50. So the total gross transaction value on the platform is 100, and Onmo would take a certain percentage of it, which would roughly be around 10%. I can't tell you exactly what that number is, but it'll roughly be around 10%. And, the rest of the money goes towards the winner. Of course, there are, payment processing costs and, tax and associated things there. But this is a fairly common model out in the industry. It's not very different from what many of the other, real money gaming platforms do.
Okay, great. So are you also looking for funding? Are you in talks with anyone for marketing expense, as you mentioned last quarter?
And Sanjay answer that.
Yeah. So we are continuing our discussion with some strategic investors and the bankers who are talking across. So yeah, we will, whenever there is any further development, we'll come back to you guys. But as of now, the discussions are on, and these are the kind of discussions which continue to happen all the while. Whenever we have some more development, we'll need to come back. But yes, that effort is there.
Okay, great. My final question is regarding the Esop policy of the company. So whenever there's an Esop announced, is there any lock-in period for the employee, or they can sell their shares post getting it?
Generally, the way the Esop policy works is any employees who get ESOPs, there is a 3-year vesting period which happens after 1 year, 2 years, and 3 years. And that's after the vesting is done, then the employee is at liberty to sell.
Great. Thank you. That's all from my side. Thank you. Yeah. Okay.
Thank you. We have the next question from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Yeah, thank you very much, sir. So firstly, I wanted to understand in terms of the gaming, the entire business size. So what is the potential that we see in this particular arena as compared to our existing business, which is, let's say, 500 crores or the top line business over next maybe few years, 3 to 5 years? So, yeah.
I think Sanjay had, addressed this question last quarter. I'll have him answer that.
So actually, Challenges Arena will be incremental revenue, and we don't want to give forward-looking numbers specifically. Like Krish mentioned, we've already got many customers who've signed up. We'll by the end of this year, we'll have about 25 telcos, between 20 and 25 telcos who we expect to target. The numbers, while we cannot talk about it, but will be decent numbers, and more importantly, to have decent profitability, more than our current profitability level. So I would stop here because I don't think we can give specific numbers as to what is the size that we would look at. But having said that, we've just started, and we expect that within this year, between 20 to 25 customers will be signed up and will be live on this. And I think that's our target. As we go along, we will continue to be a lot more transparent about what the revenue is looking like and how it is tracking.
Okay.
Just wait for a couple of quarters, you'll get all the data.
Understood. Fair. Like you don't want to share any specific numbers, that's fine. But in terms of can it be 1 to 2 times at least of existing business? Is that
Challenges arena may not be. Challenges arena may not be.
Both gaming and challenge.
Onmo business will be much larger. Challenges arena will not be 1 or 2 times of the current business. But the challenges arena, but Onmo business, Onmo gaming product, it could be a very different scale altogether, which we would.
Yeah, I'm talking about both together. Maybe if I have to talk both together.
Yes, that could, like I said, I mentioned, the Onmo business could dwarf our current business. Yes.
No, so I missed the last point.
So I'm saying the Onmo business could be much larger than our current business.
Much larger than. Fair enough, understood. And secondly, on the marketing budget, so how do we plan to spend on increasing awareness of this product? So what is our strategy on those fronts?
Chris, you want to take this or you want me to?
No, continue. I'll pitch in.
So clearly we see the major expense is about the customer acquisition cost. The marketing is more about customer acquisition, and we believe while in India the customer acquisition cost per customer would be lower, in US and other European markets the acquisition cost will be higher. Having said that, the revenue per customer or ARPU is also commensurate with the acquisition cost. So to that extent, we will end up most of the 100 million that we've talked about over the next 3-4 years. Most of that will be spent on from a customer acquisition perspective. Also, of course, branding will be a big part of it, and we expect to start that within this year itself. But substantial part of the spend will be on the customer acquisition part. We believe that over the next 3-4 years we'll end up spending about $100 million.
$100 million, right?
Yes, that's right.
So 3 to 4 years, $100 million would be approximate on your customer acquisition or the marketing.
Yeah, I mean these obviously these things go with the business depending on the business and the way our strategic and other investors show confidence. It could be a substantially different numbers, but as of now, that's our target.
Okay, understood. Yeah, fine. And my third and last query.
I'm sorry to interrupt, but you'll have to come back in this.
Okay, no problem. All the very best. Thank you so much.
Thank you. We have the next question from the line of VP Rajesh from Banyan Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. Am I audible?
Yes, please go ahead, sir.
Okay. So first question, congratulations on the progress you guys have made on both the platforms. So were there any revenues from the challenges business in this quarter, or that will come in the next 2-3 quarters?
So the revenue has started. Let me say that it's not a substantial number to talk about, but it has started in good earnest, and we believe this quarter, current quarter, and the next will really throw up a much larger number. But yes, it has started. Clearly, this quarter was the first quarter with one telco in India, and we expect now that the other telcos which are non-Indian and have also joined in, the pace of growth of this revenue will just catapult over the next 2-3 quarters.
Wonderful. My next question, Sanjay, is around the gross margin. So can you just describe whether our gross margin has now bottomed out, or do you see more pressure on it? It used to be 56% a few quarters back.
Yeah. I think it has bottomed out. We are making sure that at the gross margin level and at the EBITDA level, we are ensuring that whatever we had in terms of lower margins is off the table. While there will be always a mix in terms of some places where the gross margin will be lower, but some places they're higher. But with Challenges Arena coming in and growing in stature over the next 2-3 quarters, we believe that at the EBITDA level, the profitability will be higher. At the gross margin level, it may be slightly lower, but since the other OPEX is very minimal in that, at the EBITDA level, we'll show a much better traction. So that's how I will phrase it.
Got it. And my last question for Krish, on the Onmo platform, I heard you say you are approaching it via telcos, but if I remember, you were planning to go direct to the consumers also. So has something materially changed in that strategy, or if you can just give more color on that, please?
Sure. No, our strategy has been the same, which is both telco and direct to consumer. The telco conversations have started, and we said, that launch will be in Q3. And with direct to consumer, our beta version is already out there. And as FC also mentioned, we are adding, the cash battles and monetization in September. And, consumers will also be able to, play cash battles on that, and you'll see some revenue coming in October. So that strategy of B2C is still there. It's in fact, our product is already, the beta is already out in the market.
Right. So which one do you think will be a better source of revenue for us, and more importantly, profitability? Is the telco side or the direct to consumer side?
It's a bit too early for us to, look 3-4 years down the road. Right now, I think the prospects are very good on both sides because, as you know, there are over 100 telcos out there looking to partner with gaming platforms. So B2B looks very promising. At the same time, B2C, the esports market is one of the primary drivers of mobile gaming. And, that could be a multi-billion-dollar market in itself. So I would say that, we are terribly focused on both. It's not either or.
Got it. All right. I have more questions, but I'll get back in with you. Thank you.
Thank you. Ladies and gentlemen, before we move to the next question, we would like to request participants to limit their questions to 2 during the initial round. We have the next question from the line of Vinay Bhatija from Savilo. Please go ahead.
Hi. So my first question is, if you can give me some color on the virtual.
I'm sorry to interrupt. The audio is not clear from your line, sir. Could you switch to the handset?
Sure. Am I audible now?
Yes, sir. Please go ahead. Thank you.
Hello.
Please go ahead.
Yeah. Can you throw some color on the virtual currency that you all have launched? I mean, is it in form of a cryptocurrency where you can trade it outside? That was my first question. And the second question is on the financials. If I go to see the receivables and payables, they form, at least 20. I mean, if I see the debtors, they are around 2,000 million. And if I go to see the yearly revenue would be around 6,000 million. So that forms around 1/3 of the sales. And even paid payables seem to be higher. If you could please explain the reasons for the same. That's it.
First, I couldn't hear it properly. Can you repeat the first question? It wasn't audible.
Can you give me the economics behind the virtual currency that you all have launched? Would it be an internal usage and, or, there was this currency that was launched in Japan. That's ENG, that's a cryptocurrency, and they utilize it all over the country. And it's a gaming currency. So is it on that lines, or what does the virtual currency out over here mean?
Yeah. Fair. Yes. So, virtual currency are these Onmo coins that you will see on our platform. So, it's like a parallel economy. Players, when they come in, they get a little virtual currency to play with the product and engage with the product and, go through a few iterations of maybe playing a few moments. So that is what we have right now. Cash battles are what we are waiting for. That is real revenue that actually comes in. So that's what we are planned for in September. So virtual currency is just our own internal Onmo economy with its own a virtual wallet per se. But cash is when you will hook up your external wallet, whether it's a Paytm wallet or a Google Pay or and add cash, real money onto the platform to then battle with someone, and then when you win, you get that money out. So those are two parallel economies out there. I think your second question was probably more for Sanjay.
Yeah, I'll take that. So I think if you were to compare our receivables from last year to this year, our DSO, in fact, which was between 140 and 150 the last year, we've been able to bring it down to about between 110 and 120. So that, in fact, we've reduced our receivables. And yes, you're right, 1/3, 120 as a 1/3 of 360 is 1/3 of our revenue to that extent. But also, please, from a payables perspective, most of that is content payment, which we generally pay after we get our money in place from the customer. So to that extent, both will remain high. On one side, we'll have a receivable, but till we get our receivables in place, we don't generally pay for the content. So we need to balance our working capital to that extent. So therefore, you'll see high numbers on both sides. But yes, there are some generally most of the customers are paying us well, except there are a few sticky ones sometimes in Africa, which take slightly longer, but otherwise they have no. If you were to look at our numbers, we've not had major delinquencies across over the last 2-3 years or 4 years at all. So we've not been getting cash from the customer has not been the issue for us. Yes, from a DSO perspective, it's likely it was at 140, we have brought it down to now 110, 120 range, and that's where we are.
Just a small one. I know that you touched upon the delinquencies, but what would be the delinquencies expected in these cases, and what has been the past today?
Very, very minuscule. We've not had delinquency, like I said, in the last 2-3 years at all. So it's hardly anything. I mean, delinquency is not there. That's what I'm saying.
Okay, thank you.
Thank you.
Thank you. We have the next question from the line of Abdullah Chaudhary, an investor. Please go ahead.
Hey, good morning, good evening. Am I audible?
Yes, please go ahead.
Yes. Yeah. So, I have very basic questions. So, first is like on 6th of August, actually, I had saw that presentation, for investor. So, in that presentation, one interesting line, although it is like 0.5%, it comes as 7 million Indian rupees. Shown as challenge arena revenue, right? And revised presentation for investor, posted on 8th of August, is removed that, that part. What I'm trying to point here is like we all look for the information on new, Onmo and challenge arena and all those things, right? So then what is the intention to just remove that part? Because that looks good actually from an investor point of view, like we are actually making some progress, although it is 7 million Indian rupees, but still, right? So what is the intention to remove actually that from presentation? It's very silly, but I'm just asking. And 2 more points.
So you're right. It is so small that we didn't want to mention it.
But if you want to, showcase to the venture capital.
I'll tell you what. So we, like we've been talking, I think the traction has just begun. It started in this quarter. We've reached from a zero end users to about 490,000 end users. This is just the beginning from our perspective, and the numbers of revenue are very, very small. Imagine this, and imagine that over the next 2 quarters or 3 quarters, we're going to have 25 new customers or telecom operators who will be having challenges arena. That's the time we give numbers, and they will look decent, and we'll be happy, and you'll be happier.
Okay. And there is any reason actually why Challenge Arena is removed from Google Play Store, that we will go with B2B and that is the reason it is removed for B2C?
Krish?
Yes. So, Challenge Arena, as the brand goes, is with the telcos. So when you put it out in the B2C Play Store with the same brand name, people get confused because there are some 5,000 downloads. We don't have a B2C product there, right? So there was no point putting the same product with the same brand name there when that's more a B2B telco product.
So Challenge Arena will be B2B, not B2C, right?
I mean, it is B2B right now, and that's our plan. Yeah.
Okay. And last,
any changes, we'll let you know.
Okay. And last point is we invested actually almost 35 crore in Chingari app, right, last quarter. So what is the reason behind? Previously actually we were able to see some actually gains on that Chingari app, but not now. Any reason behind that?
Our investment was primarily, distribution of our gaming products, Onmo. So once, Cash Battles of Onmo is ready, and then we'll be ready to integrate Onmo with Chingari and distribute. And, Chingari already has, 70 million installs in the Indian market. So that's a huge number, and it literally ensures that, we don't have huge customer acquisition costs, and the Chingari audience base, which is primarily millennials, and the gaming audience base for us is also primarily millennials. So it was a good distribution channel for us. So
no, but in that case we would have added more games, right, rather than removing.
Who removed?
What I'm saying is what I'm trying to say is 1 month back when I actually downloaded Chingari app, I saw actually few games from actually Onmo and all those things. But now very less, or I don't see actually games on that particular.
We have not put our games there as yet. They might have had something previously, which they might have removed, because we are going to integrate our games. So we never had our Onmo games inside Chingari. That's not yet happened, but it will happen shortly.
Okay, perfect. Thanks.
Thank you. A reminder to participants, we request you to limit your questions to 2 during the initial round. We will take the next question from the line of Jainam Shah from India Advantage Securities. Please go ahead.
Hi, T. My first question is regarding the ARPUs of Challenges Arena. So I just wanted to, get a check from the team if this calculation is sound. So can we take 490K as the average user base for the quarter, and the revenue as pointed out around 70 million or 7 million? So, dividing that and then maybe extrapolating it from the quarter to the year, can we get the ARPUs and then compare it to the target ARPUs which we had in the last presentation?
Well, let me answer on the ARPUs. And this is obviously going to differ by telco, by partnership, and by region. So it's too early for me to say what that ARPU will be when we have 10 telcos or 20 telcos, because each one the ARPU is different. But I'll give you some broad indications of what those ranges could be across regions. So if you look at the India, Asia, Middle East region, the ARPU can be anywhere between about 25 to 40 rupees in terms of what Onmobile makes. And when you look at Europe, it's going to be much more, roughly 400 to 500 range. So that's broadly the numbers. So it's too early to. I know we are trying to do that back in calculation, but it's too early for us to do that projection because we need more data, and that will come out in the next quarter or two. Because these ARPUs vary by region and by telco.
Understood. And
and also just to add that the 490,000 is as of date towards the end and not necessarily the average. So you'll have to be careful when you
yes.
look at
that was closing. Yeah. That's right. That was end of Q1. In fact, that was end of June, and our gross subscriber additions have already increased since June.
Okay. Understood. And my second question was regarding the revenue terms for Onmo. So B2C, I understand that we'll have cash battles. So a customer will have to buy some money and then participate in challenges, and maybe there we'll get our cut. What will be the revenue terms for B2B side?
Yeah, with most of the telcos, it'll with every telco we have a business discussion on the revenue model, and in most cases it's primarily a subscription model, and that's how they enter into partnerships with gaming platforms, especially in Europe and advanced countries. And if you look at the subscription rates out there for cloud gaming platforms, it's anywhere from $10 to $20 per sub. So it's much higher. So it's a much higher ARPU than even Challenges Arena as a product.
Understood. That's all from my side. Thank you.
Sure.
Thank you. We have the next question from the line of Prakash Ramasesan from Pragya Consulting. Please go ahead.
Thank you so much for taking my call. Congratulations on the excellent set of numbers. I guess from all the questions I can hear and my own questions as well, we're struggling with understanding how the numbers are going to look financially for the developments in the new business. And this is where I've done some math of some of your competitors to see whether they are, their numbers can be used to extrapolate on what you're doing. I looked at a company called Skills. Could you give us names of any other companies we could look at so we could get an understanding of where your business is going to be 3 years from now?
Yeah, I mean, Skills is definitely a good kind of comparison. But let me also point out that, the comparison kind of starts and stops in the basic revenue model, which is esports and, real money gaming. They're also a little different from them because, we are more a product that's, cloud streamed, and you're not on the Play Store or the App Store. So it's slightly different. But if you look at Skills and how they are scaled and try to form some comparisons, it wouldn't be a very bad comparison. But there are some obvious differences between the products.
Thank you, sir. Frankly, I think everybody is extremely enthusiastic about the way a new business is developing, but very few people are able to actually tabulate that to how the numbers are going to look. That's where the market's really struggling. I know that 2-3 quarters from now we'll have better indications from your own numbers, but we're just looking for answers as to looking for any comparatives. So apart from Skills, could you point us to any other companies which are similar to that we could look at?
See, I can point out to companies in that space, but from a product perspective, we are all very different, and I'll probably point that to you. So you've got MPL, which is also into esports. You've got Skills, which is also into esports. But the basic difference is, we don't host an entire game. We are focused more on short gaming moments, the best gaming moments that you can find. So there is a fundamental difference in terms of, how the user comes and engages with your product. So we are going to have probably people coming in more often and playing short gaming moments. And also we are not a downloadable, APK, which is, an Android packet file like, MPL or a SDK that you need to download like Skills. So in both these platforms, you will have to kind of download, right? In our case, the consumer experience is very different. You don't need to download. But they both play in that same overall, mobile gaming esports space. So if your question is more, is that the space and the larger ecosystem that Onmo is going to be playing in? That's absolutely right. I mean, we are in the esports space, which is a very, very key driver. But let me also say that, there are other monetization models that will be coming down the road, especially on the social side. We haven't even added some of our social features out there. And you're going to see other monetization models and revenue streams added into Onmo going into year 2. So this is just our start, but we will start adding, new revenue streams going in as the product matures.
Very well, sir. No, as I mentioned, the market's struggling to understand how the financials are going to work out. Maybe we'll just take the broad brush feedback that 3 years from now, the revenues from the new business are going to be substantially larger than the revenues from the old business.
Absolutely. Yeah.
Very well, sir. Thank you so much, sir. Thank you, sir.
Thank you. We have the next question from the line of Subrato Sarkar from Mount Intra Finance. Please go ahead. Sarkar, please go ahead. There seems to be no response from this line. We will move to the next question. The next question is from the line of Abhishek Kapoor, an investor. Please go ahead.
Thank you for the opportunity. Good evening to everyone. I have basically two questions. Sir, first one is on the Onmo. When we say that we want to sign up with Teleco, and I understand that our is a platform which provides gaming. So how does Teleco helps us in getting the subscribers?
Yes. So, it's just like what we've done with Challengers Arena. I mean, the partnership with the telcos is to market it to the telcos and host it. And in the case of Onmo, it's also cloud streaming. So we are having discussions on, the telco hosting it on some kind of a hybrid model. So the telcos get involved, in a more intimate way in Onmo than on Challengers Arena. So they've got a captive audience base of hundreds of millions of subscribers, and cloud gaming is a application which they feel is very, very sticky and engaging for their customer base. So that's how these partnerships happen, at a very rudimentary level, because there is a strong need for cloud gaming, and the telcos want to partner with cloud gaming platforms. And Onmo is, one of the few cloud gaming platforms, and definitely the first one from India.
So can we say that the telecos sent SMS or messages to their subscriber and invite them to play on our platform?
Sure. Yes, absolutely. That will also be one way that they do it, which is to market to their own subscriber base and lead them to Onmo.
Okay. And my second question is, what is our marketing strategy to attract the direct-to-consumers when we say that we would like to have direct-to-consumer approach? What is our marketing strategy? Where all are we advertising about the Onmo and the special advantage that it is a kind of platform and they do not need to download several apps to play those games, like we have multiple games?
Yes, I think as Sanjay mentioned, we will be spending close to about $100 million plus on marketing and customer acquisition. So on customer acquisition, it will be a combination of, digital marketing to acquire customers in very specific regions where we are operating. And also in select regions where we have partnerships like what we've done with Chingari, we will obviously bring in customers through that channel. So it'll be a combination of these partnerships plus, digital customer acquisition.
Not like direct advertising on YouTube or where the players comes and play the game?
Yes, that's also part of digital customer acquisition. So when we talk about digital customer acquisition, it will be through Facebook, Google, YouTube, and wherever the gaming population are engaged and visit.
Okay, sir. Thank you. That's all from my side. Thank you for the opportunity.
Thank you. We have the next question from the line of Subrato Sarkar from Mount Intra Finance. Please go ahead.
Yeah. So I have a very basic question. Like, sir, you are talking about the real money game. So there are a lot of things need to be clarified in terms of legal issues and all those things in real money regarding real money game. So any thought on that? And like, what are the precautions or what are the methods we are taking to counter that?
So we will be on the right side of the regulatory framework always. We will make sure that anything, because our what the challenges we with each player throws to the other are all games of skill. So from that perspective, we are clear in our mind. And whatever is the government mandate on this in India, and of course in the other countries across the globe where we're going to launch, we will follow the rules of the law. We are very sensitive to the requirement from the regulatory perspective, and we will make sure nothing. We will err on the side of being on the plus side rather than on the.
So, sir, just to clarify on this, like in terms of India, sir, do we have a clarity regarding the, in our case, the kind of real money game we are talking about? Is it legally okay? What is the legal status as of now?
So as of now, it is allowed. There are a couple of states where there were some issues. For example, Tamil Nadu had a issue, but I think the Supreme Court just last week has upturned the judgment, etc. So we are closely following that. Maybe separately we can engage with you and tell you specifically state by state as to what is the status. But we will follow it to the T. Every requirement from a gaming perspective. But yes, the real money gaming is allowed. Gaming, when I say the game of challenging one person versus the other, that is allowed in a lot of states in India.
Thanks, sir. That was my only question.
Thank you. Yeah.
Thank you. Before we move to the next question, we request participants to limit their questions to 2 during the initial round. We have the next question from the line of Dr. Charanjit Sehgal, a shareholder. Please go ahead.
Good evening. Excellent presentation with respect of current status and the future plans of the company. My question pertains to, as during question hour you said that there is a base of about 490,000 users. Can you kindly indicate in respect of region-wise percentage of subscribers, please?
This is primarily India. The base that we get the numbers for Q1. Q2, obviously, as we said, we are launching with more telcos globally. So those numbers obviously will come out, in a couple of months.
So currently it is based only in India.
No, that was Q1. We've already moved and launched with telcos outside of India. That's not part of the Q1 results.
Okay, Pranav, maybe currently in respect of users, if you can kindly give an indication, region-wise percentage, and also the window size in respect of revenue window size for each region, as you had said in one of the question answer, that in India the cost to the end user might be 30 to 40 rupees, whereas the same in Europe will be 300 to 400. From that perspective, just for my clarity, I would like to have some input from your end.
Yeah, at this stage it's too early for us to, take challenges arena revenue by telco, by region and give it to you. Because, as I said, we've got about 7 or 8 live customers that we will go live with in Q2 across the globe, not just in India, but in other countries, plus their ARPUs are all very different. So we will have more clarity on this as this quarter gets over.
Okay, thank you.
Mr. Sehgal, does that end your question?
It does, because it is rather in the development stage in respect of expanding to other regions. It has an initial stage of its applicability to other regions. That's why I understood from the answer. Am I right?
Yes, we've expanded the region basis. In Q2, we've gone beyond India into other geographies, international geographies.
But the numbers are not very clear as of now. I understand it. It takes a while to rather collect data and.
Yeah, I can't give you Q2 numbers this early, but once the quarter gets over, we'll be able to share. Sure.
Yeah, that I understand. Thank you very much.
Sure.
Thank you. We have the next question from the line of Piyush, an investor. Please go ahead.
Hello.
Please go ahead, sir.
Yeah, hi, sir. Sir, just wanted to check.
Piyush, I'm sorry to interrupt. The audio from your line is low.
Am I audible now?
Yes, please go ahead.
Hi, sir. Sir, just wanted one clarification on the high number of allowances for trade receivables and financial assets as well on the balance sheet.
Yeah. So we've not given the balance sheet of this quarter.
No, I'm not talking about the March. Sorry, sir. Sorry to interrupt. I was looking at the earlier annual report balance sheet for March 20 and 19 as well. So I see a high amount of allowances. So could you just clarify that?
When you say allowances, you mean the allowances for receivables?
Bad debts, yeah. So from trade receivables, I could see an allowance.
So our policy is time-based policy. We have sometimes when there is a delay in receivables, we continue to make provisions and they continue to get around as we get paid. And our last delinquency, like I was telling in one of the earlier questions, was some 8-9 years ago. We've not had major significant increases in our bad debts per se, but yes, we continue to make provisions based on policy, which is a time-based policy. So, for example, anything over 360 days, we tend to make some provisions, but then it continues to be in a cycle kind of situation. And when we get collected, because there are some customers who pay us later, and sometimes the payment gets stuck, but we do receive the payment. That's how this works. But otherwise, we've not had delinquencies, like I said.
Okay, and so
they get reversed once we collect, and then based on the cycle of payment, we provide again, and we keep reversing as we go along.
All right, sir. Sir, and just one more clarification on receivables from subsidiaries. So what is your policy on the same, sir?
No, subsidiaries are 100% subsidiaries, so there is no challenge from that account.
Okay, thank you.
Yeah.
Thank you. We have the next question from the line of VP Rajesh from Banyan Capital. Please go ahead.
Yeah, hi.
Mr. Rajesh, we are unable to hear you. I'm sorry to interrupt.
Is it better now?
Yes. Are you on the handset, sir?
Yeah. So my question is regarding the current virtual currency that you have mentioned. I think that we are not doing that because that seems to be...
Yeah.
The audio is...
You're not able to hear you.
Oh, okay. Is it better now?
So it's still breaking, sir.
All right. I'll get back in the queue.
Sure. Thank you. We have the next question from the line of Vinay Bhatija from Savilo. Please go ahead.
So just a small follow-up. You said there is a cycle that you follow based on the time frame. Can you just give me what would be the time frame and how... Yeah, the time frame of that, the time frame that you choose to, provide for your debtors.
Sorry,
So you said that there is a company policy that you follow based on which you provide for the debtors and after that you reverse them. So I'm just asking that time frame. What would be that time frame?
Correct. So we will provide, for example, after 360 days of a receivable not coming, we will provide for it. And if once the money is received, we will reverse it. That's how we would do it.
So can you say that these 2,000 million is outstanding for more than a year?
No. The entire amount that...
Like in the pool would be added. I mean, there would be a cycle in the pool, but then on an average basis, this would only be provided if there is a delinquency of a year. Right?
Yeah, so there are certain very old provisions which are there, like I said, which are constantly there, and unless we write it off completely, that will stay. Once we do that, they will go up. But as far as the other provisions are concerned, it is done on a 365-day basis. Anything above 365 days, we create a provision for that. We keep the provision for a few years, but whenever the money gets paid, we reverse it. That's how we do it.
Okay. So for how many years would you be keeping this provision?
A large number. Yeah. We've collected almost everything. Like I said, over the last 4-5 years, there has been zero delinquency over the last 4 years. There is just a provision that gets created and then reversed, and then the cycle follows.
So how many years do you take to collect these? So when you said that you have collected everything in the last 4 to 5 years, how many years would you take to collect on an average?
No. Our average DSO is 120 days, like I just mentioned. Earlier, it used to be 140 days till last year. We've now reduced it to 120 days, which means that most of our receivables beyond 120 days are collected. But there will be some few sticky ones which stay on, for which there will be a provision which is made in the books. There are a few very old ones, like I said, which are there, which are 5 years ago, 6 years ago, which we've created a provision, we've not written them off. The day we write them off, they will be gone with no impact on the P&L.
And what would be that amount?
So whenever we assess each account and we find that this is not going to get received now, we will write it off. But the provision is already made, so that we continue to make provision so that there is no hit on the P&L.
Yeah, I do get that point, but any ballpark figure that you can give, you would have analyzed it when you would be making an annual report, right?
Let me say that we don't expect any P&L hit because of these provisions over the next 3 quarters for this year. There will be no additional hit to the P&L because of our delinquency. Let me say that very unequivocally. But unless there is a big challenge which comes up now, we don't know yet. But as of now, there is nothing to say that there will be a hit to our P&L because of delinquency. Yeah?
Right, I do get that point, that you have already provided for it. Right?
Correct.
Oh, okay. That would be, I accept that point of yours. Going forward, what would be the rate that we are going to provide it? On which rate are we going to provide the further data?
So if there is any receivable which comes to us, which, for example, any receivable of last year which we've not received, we will continue to provide, and we will continue to write back whatever we receive. Suppose there is a payment, let me give you an example. Suppose there was a payment of last year May, which I'm saying May 2020, which we've not received till now, we would have provided in this quarter, in June, right? But whatever we would have received after that, we would have reversed. So that's how.
Fair point.
Thank you. Ladies and gentlemen, that was the last question. I would now like to hand the floor back to the management for closing comments. Please go ahead.
Well, thank you all. Thank you for your questions. I think it shows your interest as much as we have into the gaming business. We'll try also next quarters to make sure we're very transparent on all the metrics so we can have a good discussion. So as much as possible, we'll identify the right metrics and share with you on both Challenge Arena and Unmo. By next time we speak in November, we'll have the cash battles live with Unmo, so it's going to be a very interesting discussion on that front, and we should have also our first operators for the Unmo side. So thank you very much. We look forward to our discussion coming up in November. Thank you.
Thank you, gentlemen. Ladies and gentlemen, on behalf of Onmobile Global Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.